Thank you. So 2 years ago, three young people walked into our commodity trading office and they're looking for a loan from us to give them motorcycles. And they were promising that they'll pay us daily for a period of 2 years. Their challenge then was they were tired of renting the motorcycles and they didn't have the capital to buy these motorcycles offhand. These motorcycles are called border borders. So we went ahead, we gave them the loan, and then they referred other friends, and we kept giving them that, and then we started learning about the industry. And we learned that there are up to 3.8 million riders in East Africa and 1.4 million in Kenya alone, and they are the ones that are in charge of doing up to 70% of public transportation and 95% of last mile deliveries in logistics, and they are then the greatest source of employment for young people, 3.8 million jobs. But on the other side, they're also taking up to care of 5 family members each rider. However, only 7 out of 10 of them own these motorcycles. And so we decided, why not give them this business so that they can own their motorcycle, and then they get a path to ownership. They start acquiring assets, accumulating assets, generating wealth, and being financially included. And we earn $1.62 per every motorcycle per day. And we earn that through a monthly interest rate of 3%, annual rate of 36% per annum for 2 years. And we've had traction. We started with 2. We are now at 55 motorcycles. We've built our technology. We built our team. We have a client waiting list of up to 10,000 applicants. We've established strong partnerships with insurance companies. And we are part of the prestigious Lab 8 accelerator. And we have proven the business model. And actually 4 of the first people who came to us now own their motorcycles. Our main competitor is the landlord. These are individuals who purchase the motorcycle and then they give them to young people to rent, paying $4 to $5 per day with no path to ownership and hence no dignity at work. But we've also learned something about our other competitors, the leasing companies. They own 15% of the market, but last year alone, they raised $50 million just between 3 competitors. So investors have an appetite for a business. It is a proven business model. The market is very big. The gap in East Africa alone is 6.3 million units, and we are just targeting just 2% of that within the next 5 years. The daily customer value is $1.62. The customer lifetime is 624 days, and the customer lifetime value is $1,011. The way we acquire this customer is by going to the associations. All of them are in these groups or stages, but now we've also been approached by Glovo, and that has opened another marketing for us by offering 3PL, third-party logistics management. However, they should not just be in a group, but also they must have a 3-month earning statement. We can check that easily by looking at their Uber statements, their Bolt statements of their mobile money. And then they must have 2 guarantors, 2 recommenders. Then you have to fit a tracking device on the motorcycle, and then we take a comprehensive life cover on the motorcycle, but also we offer a credit life on the loan so as to guarantee and secure the investment. Our goal right now for this quarter is to break even by acquiring 500 units, and to do that we are raising $935,000 at a pre-money price of $3.75 million. That's 20% of equity, or debt or convertible note at 24% per annum. This will allow us to get the units and break even. And then after that, in the second quarter, our growth trajectory is going to be to solve the 3 other main problems that they face. And one of them is access to low-cost buy now, pay later consumer credit. So we're going to offer them that at 10% a month as opposed to the 30% a month in the industry. And then we're also going to offer the mobility and logistics connection jobs, but at 5% commission for connection as opposed to the 15% in the market. And then we're also going to offer them value-added services. We're already talking to Total, Vivo, and Ruby Synergy to offer them discounted fuel. We're also talking to the National Health Insurance Corporations so that we can offer them that premium for health insurance so that they are safe when they're doing their job. And then we're also going to add electric bikes in the platform and also start securitizing the assets that you shall have gotten through this fundraise in order to reduce the cost of financing and enhance our reach. Now, with this new second phase of growth, we are going to increase our revenue per day per rider from $1.62 to $2.64, but also increase the savings that the rider makes 2x from $1.2 to $2.64. And the team running this is my friend Kato Drake, in charge of technical. He owns his own company and he has 7 years experience in IT. And my colleague Caroline, in charge of distribution, she also owns her own company and has experience in sales and purchasing. And myself, 3X founder, I own a hospital and a banking agency business. And I am trained as a lawyer. I'm in charge of product. So thank you very much, and I look forward to your investment.
Thank you, Mark. So we'll now head into the Q&A section. So for those of you that have just joined, you can type in your questions in the chat or in the Q&A section below. So we do have one question from the chat. So Mark, can you please share more about the social impact at last mile deliveries?
Thank you very much. So in terms of social impact, the fact that most of these riders do not own the motorcycles mean then that they spend most of their money giving it back to the owners where they're renting. So they don't save a lot. And if they're not saving a lot, that also then means that they're not being included in the financial literacy space. And then that also denies them a chance to have a permanent employment. When they own this bike now, they have that aspect of permanent employment. And to those riders who use these bikes to carry fresh foods from the villages or the farms, they reduce the farm waste and hence increase on the earnings of the farmers. So there's that great impact. And then right now we're also talking with Fika Mobility. We've signed an agreement with him for electric vehicles. Now this will reduce the emissions to a very large extent and also increase the savings. It will increase the savings to the riders to reduce their cost of maintenance and fuel by up to 50% and then increase the savings that they make. So, thank you.
Any more questions, everyone?
Mark, I know you touched on it a little bit, but I was wondering, can you just maybe hit it again in terms of the customer acquisition strategy and lead that into where the potential is as you expand? So, everybody on this call today is looking for exponential growth, right? Can you talk a little bit about that for your next 9 to 12 months?
Exactly. Thank you very much for that. So on one side, we are focusing only on acquiring the customer who is pre-due diligence to reduce our risk of losing capital. And that's why we are going to 2 categories of people. One, you must be a rider who is already in a group, an association. And most of them are in those associations. And the way that we have collected and gotten this initial wait list of up to 10,000 riders is through the associations. The associations in the stages and also the national associations, and also working through the county governments and the politicians, connecting us to these young people who are riding. But then also now a new opportunity for us is by doing third-party logistics management. And we were approached by Glovo. We didn't approach them, they came to us. And then it's opened opportunities now for us now to also go to other delivery companies and offer them the bike and the rider together with the smartphone. And then they pay us a flat fee end of month. And we handle everything on the side of the bike. It's an amazing deal for us. So it will lead to a lot of growth. But also on the other side, all the other competitors combined in the right-to-own space do not even have more than 100,000 units, yet the market is 1.4 million units. So it means there's a big chance to grow. And I think mainly it's also because most of them are not focused on just the border, the motorcycle. The leader is also in other areas like, boat engines, and the other ones are also in car leasing. So we are only the ones who are focused on just one thing, the motorcycle rider. So this will give us a lot of growth as we go forward.
Great, thank you, Mark.
All right, so we have some questions coming in. So the first question asks, have you considered rider safety? So possibly considering quality of vehicles, offering rider insurance, and so on.
So now that's a very great question. Actually, if you were to go around and look at the places where they park these bikes which are arrested or grabbed by the policemen, you find that very few of them are branded bikes. Most of them are just regular bikes. when the bikes are branded, when the owners have an interest, the riders have an ownership interest, they become very careful and they are hardly in those accidents. And also when they are branded, they become very disciplined. So that addresses the first part. But also we train the riders, and there's a premium. If you cause a reckless accident, then that is a ground for breaching the contract and taking over the bike and giving it to someone else. So we are very strict on that. That's the price we've had in our piloting phase. So we are very strict on that in terms of the rider safety. But again, we're dealing with riders who've been riding, so they're not just beginning. And again, the value-added services we are offering them, like the NHIF, the national insurance, that we give them the loan of $5 in the beginning, and then they pay slowly. All these things create a stickiness to the company and the brand and the culture, and make them want to behave in a given way to continue enjoying these benefits. Thank you.
And an add-on question to the safety topic: how do you manage negligence on driving rules by these drivers?
So in the contract, thank you for that question. In the contract, if they break any traffic rule, for instance, if they run the red light, we will pay the fine upfront so that the bike is not detained. But then that is a ground for breaching the contract and terminating. So they have to pay back with a penalty the amount that you paid for the fine. And if they do that thrice, then we terminate the contract with them completely. So we insist on being very disciplined, but also naturally they feel like they need to take care of their assets because they're going to own them in the long run. And then,
Awesome.
yes, go ahead.
Okay, awesome. And I think another piece of the safety topic: how do you handle rude and arrogant riders?
Yeah, so that's a good one. So we are running a business, so we are very serious. When we are doing business, we change our faces. We are not smiling. We are very focused. On one side, the person who comes to get our bike must be already known in the stage. So the stage chairperson is the first recommender. A family member is the second recommender. And then secondly, they have two guarantors, so that if they default, we have them and then two other people to go to. But third, during recollections, we also engage the police so that when we go, we can pick that bike without any violence when they see the presence of the uniformed police. And we've done this in the past. It's a common thing. There are people, that when they take credit, when they default, they become difficult. So we handle them.
Now moving on to more of the business model side. The question asks, given that the lifespan of a bike might be 10 years, how does the recurring revenue model work once you attract a new rider?
So for us, once the first rider goes out and let me just share the next phase which we are launching in the second quarter. So when we have you for the first time, we have you for 2 years until when you finish paying, and we earn from you $1,000. But after that, these other additional value-added services will keep you sticking with us. For instance, the lower cost of the buy now, pay later credit. For instance, the fact that if you get clients for mobility or logistics through us, you pay us only 5% commission as opposed to 15% commission. The fact that, in our platform, you can also make payments and build your credit profile. You can pay for electricity, you can pay for water and other utilities. So all these things create a stickiness to the brand, so that even after owning the bike, they'll still be with us to enjoy these other benefits which are very competitive.
Perfect. Another question asks about the roadmap of the product, and if you have considered potential for using green, perhaps solar powered motorcycles.
Yes, in the roadmap, as you saw again in the screen that we are sharing right now in front of you. So after the first quarter, in the second quarter, we've already secured a partnership with Fika Mobility, which offers the cheapest and also the best product so far in the market. We like their pricing, we like their model, and we like them. They're likable people also. They're easy to deal with. We tried reaching to others. We settled on Fika Mobility. So from the next quarter, we are going to also be bringing in electric vehicles, and this can be charged off the socket on the 240V sockets in the homes. So it becomes very efficient, and their duration is 100. Their distance is 100 kilometers, which is the average distance that also these other bikes face. And their pricing is around $1,500 US. It's just a difference of $100 to $150 from the gas,